What's going on, guys? Welcome back to Tradeonometry, and let's go over the Sunday prep session where I aim to get myself ready and you guys for the upcoming trading week. So let's begin. On Friday, I got my highest payout in a single week from a prop firm this year. Which is dope. So coming off of last month where I actually made 30,000 in the entire month, and I was just taking between 3 and 5,000 out. I actually took out 9,000 in a single week. So yeah, in celebrating that, really, I'm offering everyone an opportunity. So open for the first 20 people only. A founding members offer. So the first 20 people that join the Discord will get this offer. So it's for a limited time only. So yeah, act fast. So 50% off your first evaluation upon joining the Discord. And all you have to do to enter is, use my affiliate with Trade Day. So you Tradeonometry, all capitals. And then once you do that and you just send me a screenshot and then post it in the Discord or DM me, whatever it is, I'll get that back to you. So incredible opportunity. I'm truly blessed and grateful to, have this opportunity to be able to trade. And yeah, I just want to give back, to everyone that's been supporting and just watching the journey. So yeah, shout out to you guys. Y'all the real MVPs. And of course in the Discord, I go over my setups for NQ. I tell you about my strategy, exactly what's made me a $9,000 payout, as well as how I was able to make 30,000 in a single month. And then of course I go over futures and options, as well as long-term investing. Now that earnings season is upon us again and we're in Q2, I've kind of took a backseat on options because of the volatility, and I missed my opportunity to enter into a position, which I'll show you a little bit later. But anyway, so I'll go over long-term strategies for how to, build wealth long-term. Anyway, let's get into the Sunday prep session and let me show you where I miss an opportunity. So I think it's on the daily chart. Let's go to the daily. Yeah, I missed, 2 opportunities, and I'm kind of glad I missed this. So I saw this price here, and, we kind of broke out of it, but, we didn't. So even though this one closed above, my descending triangle, I was like, well, I missed it for one, and then 2, once I saw we come back up into the area, I was like, oh, okay, very short-lived. And then once I saw this close out of it, I was like, oh, maybe we are going to start to get the downside. The next time I came into the market was right here. I saw this and I was like, oh, okay, maybe I've missed this move coming back down into this area, which is 122 to like 120. And the reason I have this is because this is previous all-time highs, right? And I thought we broke out of it. This downside is going to be the retest of it. And this is going to be my entry long. So I didn't want to take this short. I wanted to wait for this break, retest. That's my strategy. And that's what I was going with. We never got it. And so, the next time I came into the market and was looking at stocks and stuff, I saw us not only make this move up, but then we gapped up. And so now there's this big gap here, and we're just pushing, breaking all-time highs on everything. And yeah, the market just doesn't make any sense. And you know what? It doesn't have to. So it is what it is. So instead of me chasing longs up here and entering in leaps, my opportunity was down here for it. And on top of that, I was waiting for my entry to come at this retest level here, which we never got. So it is what it is. Of course, there's a saying, getting where you fit in. And, I didn't get in. I didn't fit in. And it's just left gaps. So who knows if we're going to come and retest these levels at some point. But let's get into the Sunday prep session. Let's begin. So next week, not really data heavy. I will post these in the Discord, but of course we have on Wednesday, the biggest one, FOMC, and Jerome Powell is going to be speaking, talking about interest rates, talking about, I guess, current climate that's happening economically, and so we need to pay attention to what the Federal Reserve is going to be doing. Are they going to be bullish? Are they going to be hawkish? And let's just see what comes from that. The next thing I'll be looking out for is, of course, core PCE index, unemployment claims. This used to be red folder, nice orange folder. So yeah, and that's it for the week. And then we have ISM manufacturing PMI on Friday. So not crazy data heavy week. There are red folders in like GBP, Canada, Japan, and whatever. The main thing that we need to be looking out for this week is, of course, earnings, right? So FOMC is on Wednesday, and on top of that, after market closes on Wednesday, we have Microsoft, Amazon, Meta, Google, all reporting, of course Qualcomm as well, but we have big technology companies that are reporting. We have Visa on Tuesday, but this is really what I'm looking out for. And of course, the big one on Thursday after close is Apple. I'm going to actually do another session in the Discord on maybe Friday, Thursday or Friday, just to go over some of these tech earnings and, kind of see where we are, where price is and where price is likely to be heading. So that's the two things I'm looking out for. So FOMC and big tech earnings. And of course, we have to pay attention to, what's happening, with these companies. So yeah. So let's get back to the charts. This is going to be a quick session today. And if you haven't already, check out the supply and demand video that I've done, because it's literally playing out exactly as, I said it would play out. And I'm annoyed because there's a couple trades that I missed on Friday. Like, I completely missed it, and I was asleep probably. I don't know what happened. So coming into the session on Friday, let's just go over this. Like, coming into the session on Friday, in my pre-market analysis, I said that, we saw price come up here on Wednesday, and this was the high of Wednesday, fell literally following the levels that I had previously said, like literally stair-stepping. So previous high right here, made a new high, came back and retested it. So what's this? Made a high, fell, right? It broke above it, and then it retested this level, right? Once, twice, 3 times. Break, retest, retest, retest. And once it made this high, once, twice, 3 times, we broke above it. Literally, this is just stair-stepping. This is price just stair-stepping. We broke above it, made a new high, came back to this exact level in it. So this was the overnight session, came back to it, and then it bounced up. Now, of course, if you're in the overnight and then you're following the system, EMAs are CBC is short, EMAs are bearish, you can take this back down into the demand zone. And of course, don't be overly bearish here because of the reactions we got here. And of course, it's a previous area in which that we rejected, and now we turned this into a new base. So taking your profits down here or going long in here would have been the best probability for you. And then coming into, of course, Thursday, so we see this previous rejection. If you then took this as a supply high rejection, it played out in your favor. So yeah, played out in your favor. And then even though it makes, so if you was to, use this as a as your entry, so you're wanting to go long either in this area somewhere, right? Say you went long at the bottom of this because you saw this and you're like, I'm going to go long down here. You set a 20-point stop loss. It's not the end of the world. You get stopped out. It is okay. You wait for the next setup instead of trying to hold through this level, because if we broke and then we could continue down to this level. So that's why it's important to, set your stop loss, have a hard stop in which you're comfortable losing, and then you just wait for the next setup. And then of course you see we recovered straight away, pushed up to the EMAs, and then we kind of just based in this area. And then by the end of Thursday, we pushed up to Friday. Again, coming into this supply high area. This is my pre-market low demand, so let's get rid of that. And so coming into Friday, what I was actually looking at is all I saw is us pumping up, and I was like, what's happening? Bull flag. We just pumping up. There was no news or anything. I don't think there was anyway. And I was like, what is going on? And my initial thing was, okay, this is New York. We're going to probably get continuation. But at the same time, running up into the open like this is never the best setup. But the only reason I was thinking that we would get the continuation is because we fell down back into the EMA. So I thought the EMAs would actually pick it up. And I got faked out, right? VWAP was right here, and I thought, yeah, we're going to continue. We're going to hit VWAP and continue to go up to pre-market high levels. That never happened. My first thing is I should have, had an entry in this area here because of these previous areas in which price was before. So right here, I should have entered. Another place is, of course, right here. You see exactly how price is just respecting this area. And so once it came back, that's 4 times. Once, twice, 3, 4 times, right? So once it came back into this area, my risk then should have been right here, and I should have just trusted it to go higher, right? And then I could have put my stop loss below this low right here, and I'm never gonna go for this. I'm never gonna go for this entire thing. So 30-point stop loss below this low, and then I normally set it for 100 points, right? That would have been my session done. This would have been my session done. Price went right back to it, and then I wouldn't be looking for more. If I wanted to scale out my position and then have my runner go to pre-market high, then I could have done that, but I never did that. So I missed out on this opportunity. I got chopped up because I was actually waiting for price to hit where was it? 60 to hit. Yeah, it was this candle here. I was waiting for price to come just above here, and I was gonna take it short because I saw, of course, CBC was short, and I wanted price above this high right here, and I was looking for shorts initially, and it missed me by literally 1 tick, 2 ticks, and I got so frustrated, and I just wasn't paying attention. So going into the next week, it's being more selective with trades, right? So instead of me looking to take a trade in the middle of a zone, which is what I was doing, this is the middle of a zone. If we're zooming out, me trying to take a trade here, we have supply high here, demand low here. I'm trying to take a trade in the middle of a zone. Why? I shouldn't be doing that. And of course, I should be using my 3-minute chart for sentiment and of course directional analysis to guide me in the trade. So even though it missed me, we flipped here. The next opportunity, actually I did take this. The next opportunity that I took this trade was down here, but it wicked up and stopped me out. So frustrating. So where did I enter? I think I entered just below here once we turned green, and then it pushed up yeah, way beyond what I was comfortable holding. So I actually got stopped out for a loser. But it did provide the opportunity. So even though I got stopped out, you know, once we rejected here and then price turned green here back into the EMAs, this was the next phase where I could have taken a short position, right? Which is right here. And again, we came back up into the EMAs. Again, I could have taken a short position right here once the candle turned green, and it would have given me, look at that, 30 plus points, 40 points. So opportunity is there. It's just playing the ranges, right? The reason I have supply and demand is because it gives me areas in which buyers and sellers are, and it gives me a place where, one, I can be comfortable entering a position and also using it as a stop loss. So if I know that sellers were previously in this area, we break out of this previous area in which sellers were in, we come back to this area, the probability for us to continue going up might be higher than it continuing to go down. Now, of course, it could, of course, break and do something like this. So we see price push up, come back, break, and then let's say price did this. We think that it's going to go up. Nope, it could do that. So that's another thing price can do. But now, if I took my entry here, at least I know my stop is below here. It's defined, and I'm not just guessing or just holding randomly. So 2 things to practice going into next week. 1, not trading in the middle of a zone, right? Zone, not trading in it. But of course, following the sentiment first and foremost, right? So here we are, because we was closer to the demand and supply, I should have actually waited for us to come down here. So if we came down here, tapped into the zone, went up, and then we flipped CVC, this is a strong sentiment for me to go long. Where did this happen? It happened twice. So once here, but we break pivots here, and then this next time is here. We're above the EMAs now. So we know, yes, tapped into a demand zone, we flipped outside of the EMAs, and price now continues to push up. So here would have been the best entry for us to go long on Friday. On top of that, the next thing is, so we have pre-market high supply right here, and we have this demand zone here, following the same sentiment of, you know, previous rejections now turning into support. Rejection, right? We break out of that rejection area previously, and we base and we push up. We come back to it and we push up, and then the EMAs are now just guiding us. Again, if we come back down to the 3-minute chart, we can see the same thing happening again, right? So we break above it, right? We retested it. I mean, we can go as a retest here. Remember, stop loss is below here, and if you didn't take this trade, it retests right here, broke above, and then that's all you need. You don't need any more than this. So if price, so say we took our entry here, nope, not there. Say we took our entry right here. Again, remember, we're looking for 10, 15, 20 points. That's more than enough money to pad the account. 10 points is here, cover. 20 points is here, cover. And then it actually pushes up outside of the EMAs. Now, if we're using the EMAs to guide us, you know, EMAs are bullish, so we shouldn't even be looking short. 36 points is there, 40 points, and it actually pushes all the way up to 67 points. And how would you manage this trade? So 2 ways you would manage this trade is, even if you never took entry here, you follow the EMAs and CVC. So this candle here, it flips long. EMAs are bullish on the 3-minute. You take your entry within the body of this candle or at the EMA, and then you scale out once you break pivot. So if you enter there, actually let's do it with this long position. So say we're risking, we enter right here, and we're risking the 3-minute EMAs. So our risk is now defined 21 points. We're risking the EMAs. If we close below the EMAs, we know we're going to be out of this trade. And say we set a profit target for 50 points. So this is what we're looking for. What the market actually does is once we enter the trade here, it moves up 10 points. So say you scale out for 15 points even, that's $300 per contract. And then it moves up to 30 points, that's $600 per contract. And then say you hold it, wait, hold on 1 second. Let's do this. So we know this is the pivot break. This purple line is the pivot break. You're gonna want to take profit here. So if you don't take profits at 15, 20 points, you're gonna want to, of course, take profit as soon as we break this pivot, and that is for 30 points, right? And then you now trail your position. So as price continues to move up, you just trail it. So, and then you would trail to a pivot break, and then yes, of course, it stops you out here. And then we flip here, and then we go back into the EMAs. You don't even need to take another trade, but you know, the sentiment is there. If you wanted to take another trade, you would have to wait for, again, a closure below the EMAs to go short. But of course, this zone now, so you see how you're double thinking, you're having to think a lot because of how the market is continuously changing and moving. So I wasn't actually looking at the markets, that's why this was still red. So the sentiment is now we've broken above this previous high right here, and what we can see is this retest. So previous supply now turns into support, right? Meaning sellers that were previously here are now turning into buyers within this area. And you can just see the market making higher highs, right? Right here, making higher highs, market structure. And then, of course, price is just continuing up. You just see price continuing up, just following the trend, continuing up. So, yeah. And now we just have to look and see what the market wants to do when it opens on Sunday, this evening at 11 p.m. I will be asleep anyway, but we're going to leave it there. That's it for this session. And then, of course, if you have any questions or anything, let me know in the Discord. Make sure you study this. Like, honestly, study this. Like, there's a lot that goes into, you know, what I'm looking at. And, you know, my mind is changing a lot as the trading session is moving and progressing, you know. So the main thing is we're following the candles to see who's in control, buyers or sellers. And of course, these supply and demand zones are where we need to be taking caution and thinking about where we are, you know, in relation to price and everything. So going into next week, depending on where we open, I will be mapping out some new zones, you know, because of course we're at all-time highs right now. So as you can see, the market is just at all-time highs. I'm still confused as to how we've just pumped up and we've just had 3 red days, you know, but the rest are just all green days. But hey, let's not complain. Let's just, you know, follow the market and what the market wants to do. The market is saying that we are bullish right now and everything is good. What we don't want to do is we don't want to be overly euphoric in these conditions, meaning that market is just here and then they'll probably do this and just, you know, we don't want to be overly euphoric thinking that nothing can go wrong and, you know, price is just going to keep on going up. Because that's where I went wrong when I was just reviewing my March compared to the start of April. It was just a case of, okay, March was amazing. I don't think anything can go wrong. The market is just going to keep going in my favor. And then I just couldn't see the market correctly. And yes, it humbled me. It corrected me. And now we're just following the market and how the market wants to move. And that's it. So, yeah. Make sure you give the video a like. Make sure you subscribe to the channel. And of course, remember this opportunity for founding members. celebrating an incredible trading week, making $9,000 and taking it from my live account with TopStep. And of course, so yeah, if you want to get funded with Trade Day right now for the next 20 people, what Tradeonometry is offering is 50% off your evaluation once you join the Discord. So this is an amazing opportunity. Instead of you having to pay full price on an account, I'm helping you towards that account. So yeah, link in the bio for the Tradeonometry Discord. Drop me a message if you have any questions, and I will see you next week. Peace.